Morning, everybody. Okay, so load up some. Okay, so we have no news. Excuse me, no news today. Means shouldn't get much manipulation, or well, that's not true. We'll get manipulation, but not into the extent of what we would expect from news events. So, first of all, the London session Killzone is pretty much expired. We are prioritizing GU and EU. So let's start with DXY. So on the daily time frame, we have this swing high, intermediate high, I believe I said. Okay, the swing high over here, we have this 1 weekly fair value gap target, which lines up with an imbalance. So, very tiny imbalance too. So on the weekly candle, if I had to guess, I would say bullish up until the point of taking out this swing high, potentially targeting this target over here. There is an imbalance below in the sense of right here on the weekly. There is this bullish sense of or bearishness sense. Because we have this day weekly fair value up here. And on the daily time frame, on the grand scheme of things, we are having a slight pullback. So it would be plausible actually for price to tag into this weekly fair value up, then go up. But I do believe it would make sense for a price to take out this swing high first since we're closer to it. So I would expect price to go up before we were to do from here to the edge. Yeah, to be fair, we're actually closer to this bearish, bullish fair value gap over here. And since we're in a downtrend, it actually would make sense to sell in the short term. We're no longer closer to this area of liquidity. We are closer to the imbalance over here. Now, most of our analysis we know we should be done in this time frame because of the fact that this is where institutions, smart money, would be using target areas of liquidity, because this is the area of which price is I forgot what I just said. Forgive me, I was thinking about something else. But yeah. Oh yeah, this is an area of which there's the most liquidity basically. So that's why they target this. They have taken on these highs, so I'm I'll probably say we're bullish. We have market structure that's bullish. We have liquidity up here. We haven't taken it yet. So I'm just gonna say we're bullish. Okay. We've just taken out this liquidity here, which is sell buy side liquidity. And it is more, in my opinion, plausible for a retracement to now happen. And the reason why I believe so is because of the fact that we have an imbalance here, which is on the daily time frame. So type in here daily fair value gap. Make sure this is lined up properly. So we have this daily fair value gap. We obviously have market structure. Now, there was a divergence over here. I'm not going to let this one go, from this high to this high, EU created a lower high, sorry. We had the same break of this swing low, sorry. Displacement, retracement, breaking of this market structure. And then we displace downwards. So divergence, break of market structure shift here. I'm redoing this just so I can get obviously I was trading price during this whole period, so I wanted to just go over it again. So we can do two things: one, to help us get context, and two, to look back and see what price did. Because since we traded it live, the best place to backtest is going to be the times where you were live trading. Sometimes this is a mixture of study mode and reflect mode. The reason why that's important is because I will have the context of seeing it happen. And when I'm looking back and now removing all the emotions because there's no money to be traded. So now I'm going to look back on the same instance I was in, and I'll be able to compare what I was feeling like in live moment and compare it to when I'm looking at it from a neutral standpoint, which is a point of no emotions at all and no funds. Meaning that when I look at comparison, I can then alter quicker than, let's say, I was to backtest the time where I had no knowledge of, because anyone can make money in hindsight. Even though a losing trader could be profitable in hindsight, and so hindsight on its own is not enough. And when you mix live sessions with backtesting, it kind of removes almost hindsight in a way. In that, well, it doesn't remove it completely, but it removes it in the point of I would have done that, because you actually have now what you would have done because you did do it, because you saw it live. So that's why I'm going over this. I can go back over what I did last time and see if I made any mistakes or if I noticed anything different. Utilizing the information we've learned, remembered, recapped, recalled, or can pull upon in memory now. So we have this high, break of structure, retracement. This is ITH. Then we obviously shouldn't expect price to close above this whilst we are bearish. We then almost create equal lows here, push up again. Then we displace downwards, taking out these two equal lows. Just actually we created liquidity in this fair value gap right here, which has almost become an inverted fair value gap. With this daily fair value gap here, but this is clean, so I'm going to take this one. This broke structure. Now we reached our target. We now expect price to retrace and hunt for sell side liquidity. No, sorry. We took sell side. We're now looking for buy side. All right, so we are expecting price to pull up into this daily fair value gap. I think we're bullish. Another thing is that we've taken out our target, but we've also created a swing low right here for this candlestick when the market with this vertical line. This high to the right of it is higher, and this high to the left of it is higher. So that's a swing low. Swing low means that it is a sign of bullishness. Always guaranteed, but you'd expect the next couple of candles to be bullish. Lines up with the fact that we've taken liquidity, the fact that we have a swing low, the fact that we've not really got any clear targets after the fact that we're just taking some buy side, sell side liquidity. We didn't have a strong daily fair value gap, need for correction. It makes sense. Mm. Mm. So being bullish on GU would mean that DXY we are bearish on, which would line up with the pullback that we are looking for on this time frame. Now we're going to look at EU for two reasons. One, because we can use it as a SMT divergence. Well, not use it as a SMT divergence, but use it for the purpose of that, which would be to compare, because EU and GU should move in tandem. So we can see some relationships or some institutional footprints when we look at both of them. So you'll see the three I'm using is DXY, GU, and EU. High volume in USD pairs and the fiber pair, obviously. What's the GU pair called again? Is it the rookie Nukuni Tuni or something like this? Nickname for, I think it's a Tuni. That was cable. What's EU again? It's fiber, right? Okay, so cable fiber. All right. So let's look at the daily structure for EU. I'm gonna zoom in just to understand what these drawings are. Just practicing. I'm doing such a good style. Perfect. Right. So we're gonna start on the weekly. Right. This is the divergence we're talking about over here. Where this creates a high high. It's a low low. Low high, sorry. And then okay, so we have liquidity down here. We've taken liquidity from here. There's also a fair value gap here. Albeit it's not the cleanest. Same here too. This is the one from EU. It's slightly larger on this time frame. I mean this pair. Actually be an order block right here. And this is called a mitigation block. I'm not sure. I'm call it a mitigation block. I think it is. Okay. So side down here, the value gap up here. We are still bearish though. We should expect that retracement. Let's look at the daily time frame. So actually, wait. If I saw this, would that be bullish or bearish? I think I'll be bullish. I don't know if price has the strength to go all the way here, especially when we have no news. That's like high impact. Bearish. I'm not gonna lie. I think the XY is bullish. If I didn't see this, I would say that we're bullish. Which means we have to be looking for sells with these, but we've reached the target, which is kind of why I'm a bit look at the daily time frame. So daily time frame, the only valid place would be up here. Because there's not really any clean displacements here. I mean, there is one here which we look you have filled. And because we filled it, we cannot really sell from it. So we fill this daily fair value gap. That's a sign for price to continue going up. So when I look at DXY, I think we're bullish. But when I look at the currency pairs, I think we're bearish. No, bullish, which is bad. Well, not bad, but it does not go in line with this. When we look at this area here, we can see that we created a lower low, right, from this swing low to this swing low. And I believe it's the same thing for EU as well. Now, EU has been the weaker of the pairs. So it is expected that we have this stronger kind of lower low. Now, of course, bullish would mean that we're buying, and we'll be buying against this kind of area here. Now, if I was to enter sales, you can see that the midway point lines up with that weekly fair value gap that we drew earlier, which also is close to this mitigation block. Now, I'm going to be disclaimer. I'm not sure this is the MB. In fact, let me just make sure that I'm not. I don't want to. I think I get it. So it'll be the what? I'm not sure what that means. Just get rid of that MB. The start is the order blocks low. It doesn't make sense. It does make sense for price to come up to one of these zones. And until that point, we could be bullish. That's what I think will happen. Because what that would look like here is that we would be selling the dollar to this fair value gap and then targeting that liquidity. That storyline does make sense. Remember, it's a storyline more than it is a fact. And you need to know where you are in that storyline, because you may understand the book, you may know the book, but if you read it in the wrong order, it's going to be incoherent. When it's incoherent, you lose money. So the storyline, you want to know where you are in that grand scheme of things. You know, it's the worst thing. You can't have an enjoyable experience in watching a movie or a TV show, but you don't know what episode you're on. It's the worst. I promise you, the shows that I should be watching, but because I've seen them a long time and I don't keep notes, generally speaking, of where I am in the shows, I don't have the energy to look for it. Imagine you just made your food, right? You have food, you're looking for something to watch. You don't got time to be looking and searching for where you are. And obviously, Netflix helps by picking up where you left off. Albeit that if you sleep off, you kind of lose where you are. But for the most part, you don't have time, nor do you want to be looking for where or where you are in the episode whilst your food is hot, piping hot. So it's kind of like that in trading, where you don't really want to be putting your money into a show and you're not even sure where you are in the show. It's like watching the show from a random point. It's a disadvantage. So here GU created lower low as well as EU. So we have a tandem. Right. So they actually are moving the tandem. Now we are bullish up until this point. Right. We believe price would want to come up. We're just taking liquidity. We don't have the closest, we're not the closest to the next target, which is here. Closer to these imbalances and some sell side buy side liquidity. GU is the same thing. The target is further away, albeit that GU is a bit stronger than EU. And so we should expect price to move slower downwards. Though we do have that confirmation of the lower low on both pairs. And then, of course, that higher high. on DXY. So everything is looking good. Like they're all moving according to how they should. So we will be looking for buys. Now, we did have London session, which in truth, you can see from here, we took Asia's low and then we displaced upwards, which goes in line with what? With our idea. We're having we had the push to this, I don't know what this black line is. Oh, to the previous low, and then we come back down. Now I expect New York to potentially take out the low, which will be a part of this fair value gap right here, and then continue moving upwards. So that's my personal posture. I think it could have gone in here, but PCB moving slow. I do have a low time. Kind of like streamline my tabs. It's decently streamlined. Yeah, Asia. There's a video playing that shouldn't be playing. What is that? Right. So I expect New York to open, take out the low of London, dipping into this fair value gap, and then moving higher to target London's high and yesterday's New York kill zone high as well. Potentially go off further. Like I said, I'm targeting this weekly fair value gap for price to reach and then come back down to. So that's my idea. GU now, let's look at the smaller time frame. So pretty much the same thing happened. The only difference is we didn't take the Asia low. So EU took the low like that. GU didn't take the low. So we had the SMT divergence there. Lower low, higher low. So you probably could have entered the buy here. Like I said, GU is better for buys and EU better for sells, just based on the fact that GU is just kind of strong. GBP is quite strong. And interesting enough, if you're taking this, it came up to the New York kill zone high. This one is yet to do that. So there is still opportunity here. The difference that the EU has, that it has a liquidity sweep which fueled this move. But with a divergence, you probably want to get in on the one that's supporting the direction, the one that shows stronger signs to the direction, which would be this one. This kind of had a liquidity sweep institutional footprint for GU, is my understanding of it. So it did tag back in, and you would have been up technically. Here, it also tagged back into this fair value gap right here, which is actually very clean. So where would I take the low from? You have a swing low right here, here. So you could actually have gotten in here as well. So I expect price to sweep the lows of London, dip back into this area, and then take out London's highs. And there's also some liquidity up here too, although it's not within a kill zone. is still a valid high. So there's one here, and I expect to take out both. So that will be my target. This would be a better trade in my opinion because it would be tighter just because of the fair value gap size. And then the first candlestick low is only here. So maybe something like this, which would be a what? 1 to 4. And then on EU, that same trade idea. I'll be targeting New York, which is over here. Almost, it's about the same, to be fair. Cool. So that's kind of our posture. I guess we wait for New York Open, which is in 2 hours. So, a couple of options here. I could then stream come back. There's some alerts. Right now, I'm only going to really analyze EUG. That's where I made most of my money, and I'm relearning. It's very difficult. I'm not going to lie to really have the bias for all of these different pairs, and it's hard to keep up, you know. So I'm going to stick to just the two. I don't think you need 100 pairs to be profitable. Now it definitely taught me a lot. Those hitting all of those different pairs, but at the same time, I'd rather results now because we're in live accounts and we want to get a funded account soon. So I'm going to stick to EUG for now. And again, we don't have any. To be fair, we have Euro news at 6:30. I'm currently on. So yesterday, last week Monday, we watched episode 2, I think, of the was Forex. What do they call it? Okay, I think I fell asleep. I keep it a buck. I was so tired. But I mean, guys, 105 days of consistency, no? Good or no? Day 100 got some clout. I don't really look at the numbers, I'll be so real. So this is new to me. Right, so this is going through. Do we watch the video here? No, I think we just did the textbook work. 103. Yeah, oh yeah, my mic wasn't working. Okay, yeah. So volume 2, but I'll be so real. I was out. You can tell because I'm not playing any chess. Okay. So let's watch that again. What was it called? What was it called again? Sniper. I do need to mute my music. I hear this as well. real sad. I don't remember this. Yeah. Yo. What's the order block? Mm. Well, you can't hear the video.
Bouncing here.
Sorry.
Something about this level at 130.60 was a catalyst. Okay, now institutional level trading, again, revolves around round numbers. So a lot of questions I get through email, and if I'm haunting a particular forum or such, they will invariably ask me, hey, ICT, can we get a little bit more understanding of how it is that you arrive at what would be considered your key support and resistance levels? And what do you mean by institutional levels when you say price is going to come down to this institutional level, or you expect to see a particular level swept? Okay, I'm going to cover that in this module so that way you have a greater understanding. So that way not only will you understand my videos when I do reviews and trade recaps, what I'm referring to, but you're also going to see how to look for it in your own charts. And you'll understand what it is specifically that price action is doing and why. So price bounces here, okay, at an old swing high. Bounces here. Now, price trades through it, but if price ever comes back at that same level, that is a potential area of a setup. Okay, so we could look for a selling opportunity should price get to that same level again in the future.
Right.
And you can see price trades right up to this level here. The high of this candle comes right in at 130.59. So we fell 1 pip short of the actual round number, but you'll see when we go down to a smaller time frame, it really doesn't make that much of a difference because there's a lot of other factors that will be more beneficial to us. So now we have the next candle here. It sweeps up through it and then trades lower and closes on the almost below the candle. Price trades right back up into a bullish candle here, right into our 130.60. Now the high, again, on this candle comes in at 130.73. So we're 13 pips off. So again, we're looking at a daily chart. So if we're going to be just off by 13 pips and we're looking at the daily ranges, again, these are all full daily bars. That's not bad in terms of highlighting areas of potential setups or bounces, and that's what your framework is going to build upon this. because it's not about getting the weekly high and riding it all the way to Friday, or the weekly low and riding it all the way to Friday, or getting 1,000 pips a month, or trying to keep up with the next guy learning my concepts. That is not what you're trying to do in the beginning. What you're trying to do is build a fundamental base of price action, and we're going to build and expound on that each episode. And I promise by the end of the 8th episode, you're going to have a wicked understanding of price action, and you're going to be blowing your socks off. And not only will you be impressing yourself as you go in deeper study of price action, but you're going to start seeing by studying the other quote-unquote street money or less informed traders that invariably talk on forums, or you see them even in so-called expert circles. They really have no idea what they're talking about. Okay, so again, really go through this video module a lot. Not just one sweep isn't going to do it. You're going to be going through this a couple different times, and there's a lot of things that's going to go right over your head the first few times, but I promise by taking notes, yes, taking notes. Remember, you're supposed to be having a notepad next to you as you watch these videos, because when we discuss a specific topic, you're going to be wanting to know the details or specifics around that concept, so that it's not that you have to go back to this video and see it, or which video it was that specifically talked about this concept or that. You'll know where to get the information from, okay, and how to apply it without spending too much time chasing after where it is and the fundamental concept behind it all. So again, we have that 130.60 level in here. Okay, this daily candle trades up into it, just squeeze through about 13 pips, and then the next candle we have a very nice reaction here, trading lower. Now again, all we're looking at is how price is moving on the daily chart. So as we see price moving lower, we just keyed off of a nice price level here. Now as price is trading lower, now where would we reasonably expect price to trade back down to if it continues at all? Because there's no guarantee that price is going to continue lower, but because we have seen price trade off such a nice move lower, we broke through old highs. So now what we're going to be looking for? Old lows. They are found here. And if price trades through that, where do we go next? These lows. And if price was to trade through these, where would we go next? These lows. Okay? And that's what you're looking for. Again, a consistently highly successful trader does majority of his analysis on the higher time frames. Okay, you don't have to spend so much time on the monthly charts, and you don't have to spend so much time on the weekly charts, but it's advisable. But certainly spend a lot of time on your daily.
So that information right there is exactly why we're doing this, or why we are trading only cable and fiber, because of the fact that I was spreading my wings too much. I was giving myself too much credit. Like, we're only 90, let's say like 70 days into kind of learning and executing the 2022 mentorship. Bearing in mind, this is a completely new way of looking at the markets. I used to see markets purely off of patterns. So, for example, left shoulder, head, right shoulder. I'm selling here. Stop above here, for example, right? So that's the only way I used to see the markets. And I didn't care about time. I didn't care about price. I just cared about shape. And obviously, at the time, it would work sometimes, work not sometimes. But as I improved in that area, I then began to see a lot of these liquidity sweeps, or myself being swept out. As if there's a quite common terminology in the markets. There's also, I read it in a book called Trading in the Zone by Mark Douglas, where he said it's a common trait, and he was saying, I think it was like a questionnaire or tick, if it's true or not. And there was a section about what have you thought about in the markets. And one of the prompts, or one of the lines of information was, have you ever thought the markets was against you? And I ticked yes, absolutely. Why? Because I've said that. Me and my trading friends said that. All of us agreed that it happened. So, and there's a bigger person in the markets. We understand that, and because we understand that, but we couldn't put our finger on it. We just left it at that thought. But nowadays, or now I know. I kind of said both of those things at the same time. But now I know that it's the institutions, that there's an algorithm. Those two things, it's still not exactly clear who they are, but they have a name now. Before, they didn't even have a name. We just understood that there was something. It's like believing there is a God, but not knowing which God it is. And there's so many different religions, but I think it's agnostics. They believe that there is a God, but they don't know who. So that plays out the way it plays. Right. So he said something that that's quite interesting is that the best traders spend a lot of time on a daily time frame. When you're trading so many different pairs, so many different ideas, it's tough to keep up. I'm not gonna lie. Even for me, very difficult. And I tried to find a system where I would look for the entry model first, then I'd go back and look for the daily bias. But I've found that it's better. Like I can literally visualize GU and EU right now because I've traded them as my main priority pair. And when I was looking back on my results with my trading journal, link in the description, I was able to look and see that I was very consistent with the cable and fiber as opposed to other pairs where it was a bit more inconsistent. And the only thing that changes with that consistency and inconsistency, from my knowledge, that's very clear, is the daily bias. I was struggling a lot to really, get the daily bias correct on so many different pairs. But when I'm focused on one pair, they see the detail you can go into. And right now, I'm technically not a full-time trader. I do trade as my main source of income, but I don't trade full time in the sense that I'm on the markets or my life is based on the markets. That's what I want to get to. And so I'm saying that to say this, that why is my microphone volume so low? Yep. Filters. Okay. Check 1 2 1 2 1 2 1 2. When I'm quiet, it doesn't really work. Okay. Taking off the noise gate. Right. So yeah, it's very difficult to keep up with the daily bias when there's so many different pairs. And using my journal, I was able to see the consistency in Euro USD. So and G mainly Euro USD. So I'm going to stick to that. I do want the charts on this tab as well. Let me grab it. Oh, price did not come back down. Wait, New York has opened though. Somehow. Well, it's just a kill zone. Okay, GU's gonna love going up. So this should be dropping then, isn't it? Could potentially go in here. Wait, was that a part of the kill zone though? It just about was, yeah. I guess I could have entered this. Nice. What's the... Because there's also one that's for the London session. So it's 10 to 11. Wait, that's now, no? Oh, no, it's currently 7 a.m. So 2 to 3 p.m., 10 to 11 a.m., okay. Why is it giving me in? I think I'm going to set it on my calendar. So it'll be 3 p.m. to 4 p.m. every... Bless me, sorry, I couldn't beat my mic in time. So I'm gonna set the silver bullet on my calendar. So 10, 11 is probably 5 to 6 a.m. Is that true? Wait. So it's 3 to 4. So that's 8 to 9 a.m. for me. So about 3 to 4 a.m. So it actually would be from here to here. So if we was to go back to that point. Okay, we didn't fully take liquidity. What about you? Here we just create a lower high, sorry. So I'll keep saying low for low highs. So this one almost gave us a window of opportunity. If we'd taken this when it would have traded below this low, we could have potentially got in. But it's all good. We wouldn't have been able to get in anyway. So that's 8 a.m. to 9, right? So New York took London's high. I wouldn't be brave enough to sell that.
Your 4 hour, and 1 hour only if you can't really discern anything like, in 1 hour only, you don't have to spend time frames. Okay, you don't have to spend so much time on the monthly charts, and you don't have to spend so much time on the weekly charts, but it's advisable. But certainly spend a lot of time on your daily, your 4 hour, and 1 hour only if you can't really discern anything like right now. If you need to be trading, short-term day trading, you know, that's when you spend a whole lot of time on your hourly. But really focus on your 4 hour and daily, because that's where the banks, the institutional level traders, and the smart guys like you're going to try to be in the future by applying these concepts. You're going to be spending the majority of your time doing your analysis on these time frames. Now, it flies in the face of what you're commonly referred to as, this is too slow. Well, that's fine. That's exactly what you want, because you're going to learn later on in this episode, slow is good. Okay? And one of the central tenets to understanding what you should be doing as a trader is understanding what traders are hopefully trying to capitalize on, and that's price movement. Now, I'll give you a quick question before we go any further. Can you, as a retail trader, move the market?
No.
No, you can't. Can we, as a group of retail traders, move the market?
No.
Sure, on a short-term basis, but not very
What?
much. And we're talking about a minor little blip in price action. So who is it that moves price? Who can take price from these levels here all the way down here?
Institutions.
They are the large dominant players, or what is commonly referred to as the smart money. Same entity takes price from these levels up to here, and vice versa from this high down to this low, and this low to these highs, this high down to these lows. So the question begs is this: if you're not spending time trying to learn what it is that they do, okay, on a larger time frames, aren't you really shooting in the dark? I mean, you're really not giving yourself any real measurable chance. You're stacking the odds against yourself if you're looking at time frames less than 60 minutes all the time. Because there's no neon sign jumping out on your chart saying, okay, this is a buy. Now, you may believe that's the case, but I can assure you that is not how it works. If you spend the time and the exercises that we're going to be covering in this episode, really roll your sleeves up, get yourself some time in front of the charts, and spend some study. Not looking for trades. You want to be studying what price has done in the past, why it's behaved that way, and I promise you will activate your reticular activating system, where it basically tells you every time you see something that you've grown accustomed to seeing, your brain will immediately allow that to come into your mind, and you'll receive it, and you'll say, okay, the last time I saw this happen, this is what transpired as a later effect. If you don't first train your mind to see what it is that price has done in the past, and it repeats over and over and over again, invariably you're going to be a better trader because of it. Now, I'm not saying better trader is consistently profitable. That's nothing that I can promise. But I can promise that you're going to have a much greater grasp on what price action is doing. So then you can start applying some concepts, even from your own repertoire or your toolbox, that will assist you in making trade decisions. Now, again, I'm not advocating you use real money. Learn to develop into the trader that you aspire to be with these ideas to stimulate your development. Again, I don't want the credit for your success, and I don't want the credit for your losses either. So please be responsible with the information I'm presenting with you in these modules, because again, I'm not acting as an advisor, but I'm just showing you the things that I do in my own trading and what I've done for almost 2 decades, and I promise if you spend some time with it, you're going to see some value in it. So we have this 130.60 level in here, okay, and price starts to trade off. And as price moves lower, again, we're eyeballing these levels in here. Now, as price starts to move into these lows, we could reasonably expect to see pauses, bounces, but you can see there's a very large acceleration moving lower. Price gets a small little bounce in here, this little bullish candle, okay, and that's on the heels of these lows here, okay, but price eventually trades all the way down right into this 127.70 level, again, which is that level we have over here, and these lows here, and you can see how price reacts there. Now,
so one of the things I've learned the most from this is definitely support and resistance. That he's looking at areas where price would be steamed as support and resistance. And the reason being that retail traders are going to be seeing that, which is why almost to an extent we look at equal lows and equal highs. Now, any area of resistance or support would only come or become manifest with when there's at least one. It needs to be a low for there to be a second equal low. So every low on its own and high on its own is a place of liquidity in itself. Obviously, that's then strengthened when you have an agreement. So that retail trader will be buying this because they see this as support. Support. Oh, we buy this again. Over time, I wouldn't have bought this because I'm seeing, well, you can see here that we're buying from this area. But we're not making the high highs. So I wouldn't buy this person, but someone will. So that is a reason to target this as a sell. And you also have the fact that we have the structure on our side too. Excuse-moi. So EURUSD is a bit lagging in comparison to GU, so there might be opportunities here, albeit I did want to be on GU. I would like for New York to take out London's lows for liquidity purposes. The XY is looking chilling. From April the 1st. Basically over here.
There really isn't any magic to this. It's simply understanding what the institutions have done in the past at that particular level, and when price comes back down to it, we anticipate the same reaction or a similar reaction in deference to what price is going to do next. We don't have a crystal ball. We don't know for sure what's going to happen. There's no guarantee that it's going to always transpire like this. So that's why we use.
I'm going to end stream here. I don't want to bore myself out because I do want to come back for New York Open. So I'm probably going to watch this off stream, do some other things as well. I need to eat and also prepare for my day a little bit more. I'm so tired. I slept for like... I can work this out. So I had a 6-hour nap, which is crazy to say out loud. I was up for like 6 hours. And then I had an 8-hour sleep. So 14 hours. Albeit I didn't have any sleep the day before, so it works out. Nevertheless, that's us for now. We'll probably watch this again. I might do some more work off stream and then I will come back. But it's quite good. I might even rewatch this again in the future. And then we will move on, of course. So yeah, appreciate you guys for tuning in. We'll be back. We'll probably have some signals potentially if price gives us the go ahead. And then we will post on the Telegram. That's free to join in the description. And I'll catch you guys later today or tomorrow. It's been your boy CJ at Sea. Peace.